Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for what is going to be a very different video than you're used to. We're going to be talking about the debt ceiling and the possibilities of the United States defaulting on their debts. I'm going to be breaking down exactly what the debt ceiling is, a bit of a historical context to the debt ceiling, why it's important, what it may mean. It could potentially be the reason why the dollar has sold off so much. Certainly if they have to raise the debt ceiling. We saw a huge raising of the debt ceiling with obviously the lockdowns that took place. And essentially, I'm seeing a lot of this narrative being pushed around by the bearish among us. Now, we've taken a sort of stance on the cryptocurrency market that from the 1st of January, having reviewed where we were economically, and looking at the crypto space with merit, we've decided that we're actually not bearish on the crypto space at this point. Now, that doesn't mean we don't think there's going to be lower prices or a new low. It more just means that, we're not betting big time on the downside. I think the majority of that is well and truly behind us. We were out the market all last year. And actually, the individuals that are still very bearish are kind of throwing this narrative around. And I think really without understanding it. Now, if the US did indeed default on their debts, it would have huge repercussions. Economically, it would likely cause a cascade of repercussions or defaults, I should say. And this would be really, really detrimental. But I don't think they're going to do that. The fact they call it a debt ceiling, it's more like a rooftop bar than a debt ceiling because they continue to increase it. It's likely rather than default, they're going to increase it again this time. And actually, if you look at what them raising the debt ceiling, devaluing the debt that's already out there, i.e. the currency, because currency is debted into existence, which may explain why our Dixie's had such a bad time recently. You increase the value of the things that are pegged against the fiat, the debt, so on and so forth. So we're going to be breaking all that down. We're going to go one step further. This was an article that I found actually really summarizes things rather well. It also talks about the sort of political agenda with the debt ceiling and how they may try and use this as a weapon to get what they want. And then we're actually going to look at the actual letters. I haven't heard too many people speak about this, that were sent to the House of Representatives from or by Janet Yellen, essentially calling for them to take measures and that actually this is rather serious. And we'll look at the two kind of measures that she has set in place. So we'll maybe start off with a little bit of historical context on the debt ceiling, what it is, a bit of a how we've got to where we are at sort of 30 or $31 trillion, which is the ceiling. And then we'll look at sort of, why this is an issue and everything sort of relating to it. So I want to just start with one of the headlines. This isn't the first headline involving Yellen. Yellen says Treasury is taking extraordinary measures to avoid defaults as US hits debt limit. The Treasury Department started taking extraordinary measures to pay federal government bills as the US hit its debt limits Thursday. Treasury Secretary Janet Yellen said. So go ahead. You don't really need my face here for this. Sorry, that's the point. Yellen is pushing Congress to pass a bill to lift the country's $31.4 trillion debt limit and expects the Treasury can keep paying its bills at least until June. So actually, if you watch my daily cryptocurrency market update from today, we looked at the yield curve in relation to markets, and we actually showed you that it wasn't until the yield curve was uninverted that the crash happened. So maybe that is June. We're not saying that there isn't going to be a crash, and we've totally avoided all the mess of everything that's been caused over the past sort of 3 years now. But we think that actually we've got almost a bullish take on markets over the next 3 to 6 months. And potentially June, if we get that yield inversion and it goes right the way back up, could be if they, decide they no longer want to raise the debt ceiling, although it's likely they're just going to continue to kick the can down the road. I mean, why wouldn't you? Nobody's going to, they're probably going to wait for somebody like Trump to get back in office before they try and veto a raising. And you've got to understand that historically, this debt ceiling has not been much of a ceiling. Again, it's been more of a sort of open rooftop bar. But we'll talk about this. So some House Republicans have suggested they will push for spending cuts as part of the debt ceiling agreement. So there's going to be spending cuts. Nobody spends more money more liberal than the government. Um, it's rather interesting, to be honest, what's going on right now. But to explain what the debt ceiling is, let's take the Guardian's report on it. Congress has the ability to set a limit on how much money the US government can borrow to pay for its expenses. This limit is called the debt ceiling, and right now the limit is 3.14 or $31.4 trillion. Borrowing money helps the federal government pay for expenses passed in its budgets, like Social Security and Medicare benefits, and the salaries of the US military service members. It's basically US spending, and they borrow to sort of facilitate this because we're in just this insane deficit that we're never going to get out of. And the problem with continuing to borrow is that deficit continues to widen. The system is entirely broke, guys. It's why we're in crypto in the first place, why I got onto Bitcoin in the first place. And then, like many early Bitcoiners like myself, it's actually what led me to the likes of Austrian economics and stuff like that. And actually many Bitcoiners, before they were Bitcoiners, were Austrian economists. Now, I'm not a Bitcoiner necessarily anymore, but I think that the principles and the reasoning for Bitcoin was a sound one. So historically, I think that the debt ceiling, there was a law passed in 1981 to cap this. Obviously, because you just increase a load of debt, and if debt's what backs currencies, then it's going to be like when tobacco was a currency in the United States, and then all of a sudden everybody decided to grow it, and then you got huge inflation across the board. So they need to sort of keep the Ponzi is probably not the right word, but economy in some sort of a stable role. And one reason that we've had so much volatility, of course, was because of a raising of the debt ceiling, a taking out of debt to pay everybody and furlough people and sort of stimulate during that time period that we've just gone through over the past couple of years. And actually, this may be something that they're going to have to do again, and they may have to up the debt ceiling from the 31 trillion and actually bring it forwards. So what happens if the debt ceiling isn't raised? We're going to talk about this. And the failure to meet government obligations, so to pay the debt, it's going to have huge repercussions. In my opinion, the debt ceiling is that they'll just raise it. Why would they not, right? They've always consistently raised it. Do you really think this is going to be the one time when they go, yeah, we're not going to raise it, we'll just let the US default on their debts, which has never happened? I mean, if that was to be the case, which I do not believe it will, then that would be significant. And then we're going to get into some of Janet Yellen's actual letters to the Department of Justice, or sorry, the House of Representatives. So what happens if the debt ceiling isn't raised? If Congress does not raise the debt ceiling in the coming months, things will quickly go south for the economy, Yellen warned. Failure to meet the government obligations would cause irreparable harm to the US economy, the livelihood of Americans, and the global financial stability, she wrote. So, of course, they're going to up it. They're not going to do that, guys. If the federal government defaults on its loans, investors could lose faith in the US dollar, causing the dollar to weaken, stocks to fall, and trigger job cuts. Even if the debt ceiling is raised, a prolonged fight over it could still cause long-term financial harm. During a particularly vicious debt ceiling battle in 2011, credit rating agency Standard & Poor's downgraded the US government credit rating for the first time in history, making it more costly for the US government to borrow money thereafter. So why isn't Congress raising? So there's a sort of battle going on right now. You know what politics is like, guys. They don't really care about you, just their own agendas that they've probably got, deals in. Why does the debt ceiling exist? Experts have pointed out for years that there is no good reason why the debt ceiling exists, and that raising should be routine. It has to be routine. If you understand economics and how money works in its current form, it's inflationary by nature. You borrow a pound into existence or a dollar into existence, you have to pay $1.10 back. If you don't print more money, you can't pay that debt, and the whole system comes into question because the debt doesn't get serviced. This is the mess we're in, guys. So it's a bit of a passionate rant there, but it says what happens next. It's talking about how, there's a sort of a war going on between the two houses. but they will up the debt ceiling, guys. This is the history of the debt ceiling from 1981 to 2022. In my opinion, this is very interesting for somebody who has been watching the Dixie and the dollar. This is likely why the dollar has done this move. Very likely. This is for me, this was a bit of a shocker in terms of how brutal it's been to the downside. And actually, you know, we can see yields come. So maybe this is why the uncertainty around the dollar, just like in the UK with the gilts. The problem is, and this is why we said we were expecting a bit of a pullback for the crypto market, is I think this will catch a bid sometime soon. And it's probably going to be likely on one of these decisions. So what that will may be, we've seen real moves with the Japanese yen because of what they're doing with their sort of debt procedures. It's a faulty system that's destined to fail, guys. This was the first letter from Janet Yellen sent on the 13th of this month. Public law increasing the statutory debt limit to approximately 31.381 trillion on December the 16th, 2021. As you know, the debt limit is the total amount of money that the United States government is authorized to borrow to meet its existence legal obligations, including Social Security, Medicare, blah, blah, blah. I am writing to inform you that beginning on Thursday, January the 19th, 2023, the outstanding debt of the United States is projected to reach the statutory limit. Once the limit is reached, treasuries will need to start taking certain extraordinary measures to prevent the United States from defaulting on its obligations. The two extraordinary measures that the Treasury anticipates implementing this month are redeeming existing and suspending new investments of the Civil Service Retirement and Disability Fund and the Postal Service Retiree Health Benefit Fund, and the suspending reinvestment of the Government Security Investment Fund, of the Federal Employee Retirement System, Thrift Saving Plan. Congress has expressly provided Treasury with the authority to take these actions, and prior Treasury secretaries have used these measures, which will reduce the amount of outstanding debt subject to the limit and temporarily provide additional capacity for Treasury to continue financing the operations of the federal government. After the debt limit impasses has ended, the CRS portal funds will be made whole. So essentially not paying. So this is the thing. I've always said this. I mean, I hate the fact that when I was employed, I actually, as part of, and I've not been employed now for over 5 years, your employer in the UK is mandated to pay a pension. And often these are government, you know, or well, not often the government, but they're often, so there's a pension thing put in place. I, at the age I'm at, do not want the pension. And if you're relying on a pension for retirement, you know, I think that's a dangerous place to put yourself in. If you're trusting the government, and the government mandate private pensions, by the way, you can't become a pension company in the UK unless you jump through certain hoops. It's why I think the likes of the FTSE and stock markets have largely been elevated for so long. You know, anyway, I'm getting on a bit of a rant, but this was, of course, the first letter. President and Treasury Secretary of both parties have made clear to the government must not default on any obligation to the United States. As noted, Treasury Secretary is administration over receiving decades have been used extraordinary measures when necessary, yet the use of extraordinary measures enables the government to meet its obligations for only a limited amount of time. It is therefore critical that Congress acts in a timely manner to increase or suspend the debt limit. Failure to meet the government's obligations would cause irreparable harm to the US economy and livelihoods of Americans and global financial stability. Indeed, in the past, even threats that the US government might fail to meet its obligations have caused harm, including only credit rating. Yeah, we spoke about this. The period of time that extraordinary measures may last is subject to considerable uncertainty due to the variety of factors. So essentially, she's saying that, you know, they want to essentially up the debt limits. And so these are the two ways that she's essentially putting forward that she's going to be able to avoid defaults. And then this is a letter that literally went out today. I'm writing you to apprise of action the Treasury Department is taking in regards to the debt limits. In my letter on the 30th of January, I noted the public law increasing the statutory debt limit to levels of uninformed. First, I have determined that by reason of statutory debt limit, I will be unable to fully invest the portion. So she's essentially attacking funds here, pensions. As last Monday, she's basically going after public servants and saying that we're not going to invest in their pensions and the funds to try and stop us from essentially going over that debt limit or defaulting on other obligations. So she's taking from one place to give to another. This is, in my opinion, going to be an ongoing situation to watch. I do not believe that they will allow the US to default on their debts. And actually, this chart also shows Republicans in office and Democrats. And Democrats have historically been more forthcoming with spending. And I think that's likely going to be the case. And I think, yes, it's very unprecedented times because of what we all lived through over the past 2 years. But it's very likely to me that they are going to increase the debt limit. It's probably why the US dollar is having such a shit time. Because if you look at, the USM1, this is what we got. And this has obviously coincided with the debt limit. So if they up this again, this is something that we've said investing is all a game of liquidity. And they have to start doing something like that. Or we see something like this take place in a kind of this sort of a manner, then we can actually get long assets again, providing that they don't only do a 6-month stimulus that then leads to a default. I cannot see the US government not upping the debt ceiling, in my opinion. And she's just putting in measures right now. It's probably already agreed that they're going to up the debt ceiling. That there are definitely arguments that suggest that you can't just continue. And they did quote some battles right now going on in the House of Representatives, saying you can't just keep up increasing it. But why not? And it has to increase. It's a completely flawed system. But I've rambled on for long enough. Let me know your thoughts in the comment section. Are the US going to default? Are they not? Is this going to lead to a far greater issue down the line? Eventually, it will have to come to a heads. The other alternative is people just lose complete faith in the US government and wake up to the scam and just lose all trust in it and look for something else. I think that's going to happen. I would hope it's not the other one. But that in itself would destabilize the entire United States. This is what I mean when I'm a very big advocate for continuously saying this, despite the negative repercussions that I get. You are in a form of financial bondage in the Western world. In fact, globally, we're in financial bondage. There's an element of financial slavery that is put upon you, and it's because of how the system works. And it's actually the very tool that's been used to sort of keep people with their heads down, having to make those so on and so forth. But it's a flawed system. It's going to come to an end someday. I just don't think the day is going to be yet. And actually, this may be bullish for markets, because if they raise the debt ceilings, well, it means they're going to borrow more money. That way it's going to find its way into the economy, so on and so forth. All I've got for you in this video, guys. You enjoyed the content, like us, always appreciate it. So as a comment, and look forward to seeing you all in the next YouTube video. Have a wonderful Thursday, guys.